What's going on in the markets right now? Clearly, equity investors don't seem too concerned about a possible hawkish surprise from Jay Powell later today.
Yeah, well, clearly, I think the big surprise will not actually be today, what Powell says today, but really what the data says in the coming weeks and months. I think markets have priced in a little bit of a hawkish stance. So if at all, we could get a reversal of that from Powell's remarks later today. But it's really the data. And the data, frankly, it does not look as great as what markets are interpreting. I don't know, for somebody like me looking at fundamentals, it still looks pretty bad. Inflation is still at a fairly high level and is not declining at the pace that would suggest we're going to get that famous Fed pivot in time to justify some of the rallies we've seen lately.
So, Elliot, what does Powell need to say today to reset market expectations of a Fed pivot at some point next year?
I think if a real surprise would be if Powell calls out the peak in inflation, which looks like is behind us, and if he points out that he's seeing some type of deceleration that is not, let's say, centerpiece in terms of market talk, that would all be quite dovish. I'm very skeptical that's what will come out. Quite the contrary. I think he will stick to the hard line that inflation on all metrics that they're watching needs to come down faster and steeper than it has been so far. And as a result, we have seen the rates market move up over the relatively quiet summer. I suspect we'll get that message that we're staying on course, and obviously that's not necessarily a great message for markets.
We've been speaking with experts all week on this, and clearly there's still deep divisions about whether or not we're going to see 50 or 75 in September. What's your view as it stands?
Right now, I'd say the data speaks more for 75. The markets are split right in the middle. I checked; it's roughly they're pricing in 65 basis points, so they're still somewhat hedged. But I think what is the market telling us? It's expecting 65 for September, 130 by year end. That does not jive with the macro data that is clearly forecast. From the consensus of economists is that inflation will still be 5.8% by year end, by the end of Q1 in March. That's when the pivot is supposed to happen. I don't understand how the pivot happens when you have inflation around 5 or even above 5%. So that pivot that we're looking for looks to me way further out into the future. And I think that recognition of markets that this is going to be tightening will be more painful than priced in has yet to filter through to equity prices.
The other interesting thing I've been looking at is this upward revision to Q2 GDP. It was only marginal, and yes, the United States is still in a technical recession, but how do you think the Fed is viewing the growth trajectory right now? And is Powell going to be able to engineer a soft landing for the US economy? That is, addressing the ongoing and persistent issues in inflation while also protecting growth.
Yeah, well, that's the Goldilocks scenario, and I think markets over the summer have said the soft landing is in reach. That's what's going to happen. I remain very skeptical. Again, I think even the Fed, is less worried about what happened in the second quarter and much more worried about what is going to happen in the fourth quarter. Growth is holding up thus far, and inflation is not coming down at the pace it needs to. What does that mean? As a central banker, that means you have to tighten faster. You have to bring demand down faster. And that means growth will actually have to respond to the negative. So despite the data, which is fairly strong and robust, the data actually has to weaken. And so that means if I'm sitting on the FOMC, that speaks for a 75 basis points hike in September. That speaks for a little bit of a surprise vis-a-vis the market. And frankly, the markets are not helping. When you have equities rally, you have financial conditions loosening again, which is the opposite of what they're trying to achieve. So they would like to take some of that enthusiasm out of the market, and that's what I think we'll hear from Powell in a few hours.
So, Elliot, what's your view on what has driven the market off the June lows? And to a broader question, do you think we have seen the lows for equities now? Have we passed the low point, at least in the United States?
Yeah, that's obviously a tough one. Our view is that we're underweight U.S. equities because we think this is still a bear market trap, a bear market rally that's giving way to a lot of the positive news and momentum we've seen over the summer. that did suggest, okay, inflation has peaked. But again, let's look out, if you really look out 6-9 months, even in the most optimistic scenarios, inflation will not come down fast enough to really release central bankers from their duty. And as a result, a lot of the trends we've seen that were negative for markets, overly strong dollar, rates pricing a steeper curve than originally planned, yield curve inversion, all of these signals will remain in the same direction as we've seen before the summer relief. In short, I do not think we've tested. I think the lows will be tested again in the coming months.